July 2023 jobs report is out. Lots of charts and details. Let's get into some economic predictions as well. Hello, this is ChatGPT today. So the jobs report from July is out from the BLS. Let's get into it here right away. 187,000, which is it's pretty little bit under expectations. But here's the point: the trend is going down, and that's because of the Fed's trying to raise interest rates and trying to make this make the economy weaken a little bit to battle inflation. Going into specifics here are the earnings, the weekly earnings, just slightly edged up, and it's about making pace. So at least you're not losing money. Beforehand, you were losing money, and now you're about break even in terms of inflation, in terms of the hourly earnings. Getting into this labor force participation rate, it's still lower than what it was before COVID, but it's flatlining here, so it looks like we've been peaking out. Of course, that's kind of indicating some cultural things that we have to talk about in future videos. Here's the breakdown in terms of where jobs pluses and minuses. For the most part, it all came from private education and health services. Yeah, that's GDP and jobs, but it's still not manufacturing and actually seeing an economy with people buying products and services that people would probably want. And of course, you can make an argument that health services is important, but it's just basically the friction in the society to make the products we actually do want. So let's get into it. Are they cooking the books? A lot of people are talking about they're cooking the books here. The big thing here was the birth death rate was jumped up. Some people think that was a miscalculation, so maybe the numbers were a little bit stronger than they should have been, because all of a sudden this birth death rate came up. And of course, everybody's talking about the revisions. The revisions it keeps coming down. Of course, if this is true, this may actually put, with the birth death rate and the revisions, perhaps put that number more realistic around the 130 to 140 area, and the market's responded. Here's another thing that's people looking at is the part-time jobs increasing. That's usually a negative sign. So employment is coming off, not falling off a cliff, but it is coming off, and probably the real number is about 130, 140. And of course, the markets respond to that. They're thinking, well, maybe we're closer to that Fed pivot than ever. So let's get into some predictions here. Here's the thing, something to look at here. This is real S&P versus real GDP, and of course that's inflation. This is inflation adjusted, and you can see that on a long-term basis the market is way beyond the real GDP. So this probably will have a mean reversion. So maybe that doesn't necessarily mean the market will come off heavily. Everybody's waiting for the big sell-off to get in, but it might mean that we're going to have some pretty good stagnation in the market here for a year or so. So that'll be interesting. Of course, here's the you can see this also, that on a long-term basis the GDP versus the capitalization is pretty much flat, and this looks like it will continue in the flat line on the future. So limited growth. But here's an interesting chart here on the future. This is corporate profits to the GDP ratio. You can see that these things come in cycles. And it's flattening out here, and it looked like it could roll over. So the future is going to be dubious for stocks. It doesn't necessarily mean they'll decline, because that's the real stocks. Because if it's inflation going to boost the stocks, that's a different case. So stocks still could go higher, but in relative terms to inflation, maybe not quite as high as a lot of people are anticipating. So that's something interesting thing to think there. This is a kind of a repeat chart that we've had in the past. This is the Fed funds rate predictions. I think the Fed is looking for a pivot. These job numbers seem to indicate that. We could be seeing that begin to come off the end of 2023, into 24, into the election, and then after that start to head back up. Looking at the trading chart here on the 30-year bonds, we see that we kind of busted up out of this wedge here. It could poke higher, but I do think that we're hitting the end here, because I do think the Fed is going to pivot and then come back down and then head higher again after the 2024 election. So interesting point there. Check out the AI and see what are the chief motivators for job growth, and take our online prediction, or online polling rather. You can see the link in the description box. Is the jobs going to fall off, or is it just going to kind of gradually spill down until the pivot? Don't forget to subscribe.